Toyota's most recent entrance into the electric car market has sent shockwaves across the automobile industry. It's a controversial strategy shift that has everyone talking. While the business anticipates record growth, it attributes this to an intensifying price war in China. But the big issue is whether Toyota's hybrid bet will pay off in the long term, particularly as key car markets like Europe and the United States accelerate EV adoption. Ignoring consumer preferences, is Toyota repeating past mistakes? Toyota's fiscal triumph. The statistics in Toyota's most recent financial report reflect a spectacular story of success that reverberates across the automobile industry. The company's financial success has been excellent, exceeding all expectations and establishing new records. Toyota's sales have skyrocketed this fiscal year, hitting a record 4.7 million automobiles sold. This amount is not only excellent, it marks a staggering 114% rise over the previous year's sales data. This rate of expansion demonstrates Toyota's continuing market presence as the company continues to attract and satisfy a varied spectrum of customers globally. Toyota's automobiles, both conventional internal combustion engine models and electric equivalents, have clearly connected with people worldwide. This tremendous development suggests that the firm has effectively handled the contemporary automotive landscape's obstacles and possibilities. Their ability to not only preserve but also significantly increase its market share in this changing sector demonstrates its in-depth grasp of customer preferences and inventive approach to car manufacture. The ramifications of this historic year reach beyond the company's borders, sending waves across the automobile sector and raising concerns about rival manufacturers' strategy and the future of transportation. Electrified vehicle surge. Toyota's electric car sales have risen to 35.3% of total sales, indicating a substantial move toward more sustainable and ecologically friendly transportation alternatives. The major twist in this story, however, is Toyota's fondness for hybrid electric cars, which have emerged as unmistakable stars in the company's range. HEVs account for 1.7 million of the electrified cars sold, far outnumbering the comparably modest 59,000 sales of battery electric vehicles. This preference for HEVs over BEVs not only demonstrates hybrid technology's continued appeal, but it also raises serious concerns about wider consumer opinion and the industry's transition to completely electric cars. The consequences of this decision reverberate across the automotive industry, forcing us to consider the future trajectory of electrification and the role that various kinds of electric cars will play in defining it. A 40% EV forecast slump. Toyota has delivered an unexpected bombshell by substantially reducing its EV sales prediction for the year, sending shockwaves across the automotive industry. The business had expected to sell roughly 202 IQ EVs, indicating its commitment to shifting to cleaner electric travel. However, a shocking twist in this story discloses that Toyota has now reduced its EV sales prediction to 123,000 units, a loss of over 40%. This amazing change has far-reaching ramifications not just for Toyota, but for the whole EV industry. It raises serious concerns regarding the motivations underlying this unusual shift in strategy, the ramifications for Toyota's position in the EV industry, and the broader implications for the future of EV adoption, especially in the context of a quickly changing global automotive market. The Chinese market decline. Toyota has reduced its EV sales projection due to a slowdown in the Chinese market, citing an intensifying EV price war as the key driver. This unique approach emphasizes a complex web of elements at work, reflecting the delicate interaction between worldwide markets, consumer preferences, and competitive dynamics. This Chinese market situation not only drives Toyota's strategy move, but it also has ramifications throughout the global automobile sector. It foreshadows the larger ramifications of how EV pricing competition might upset established market competitors and modify the strategy of industry titans like Toyota. This development encourages us to consider the ramifications for other key auto markets, as well as the rising prominence of China as a trendsetter in the EV sector. possibly setting the tone for future global trends and the necessity for automakers to adopt nimble strategies. Toyota's strategy shift. They also have opted to embrace its history of hybrid electric cars as a shield against the increased competition in the EV industry, in an unexpected and strategic turn. This surprise move has raised a number of intriguing concerns regarding Toyota's future path and commitment to EVs. It reveals the automaker's distinct approach to the changing market environment, one that prioritizes HEV technology above the still nascent competitive realm of pure EVs. This intentional move not only highlights Toyota's adaptability to market constraints, but also raises wider questions about the company's future of electrification. As the automotive industry accelerates toward electrification, Toyota's particular route opens the door to conversations about the various techniques used by vehicle manufacturers in their pursuit of sustainability, as well as how their decisions may affect the future of mobility. Industry-wide strategy shift. When we broaden our view to take in the whole auto industry, we see that Toyota's recent strategic adjustment is not an exception. This is consistent with the actions of other major automakers, including as Ford, GM, and Honda, who are delaying similar investments in the emerging EV market. This coordinated movement might have far-reaching effects on the whole EV industry, and it's happening all at once. The actions of these key firms to postpone their EV expenditures are symptomatic of a common feeling and strategic maneuvering within the automobile sector. Indicative of the reluctance of traditional automakers to plunge headfirst into what is seen as an unpredictable and at times disruptive industry, these developments shine a focus on the enormous pressures and problems inherent in the quickly evolving EV environment. In essence, this development compels us to consider how the changing objectives and tactics of these important actors will affect the rate of EV adoption and the eventual success of the EV business. The hidden strategy. The revelation that Toyota spent $8 billion on a battery factory for EVs in North Carolina marks a watershed event in the company's strategic evolution. Toyota's commitment to establishing a solid presence in the rapidly evolving electrification business is shown by this massive influx of money. The company's dedication to providing a comprehensive selection of electrified products is shown by the opening of 8 battery manufacturing lines for both BEVs and plug-in hybrid electric vehicles, PHEVs. Toyota is reducing its EV sales target, but this expenditure demonstrates the breadth and depth of the company's ambitions in the EV market. This action has aroused much conjecture regarding Toyota's true future plans. One may interpret the company's heavy investment in EV battery manufacture as an acknowledgement of the need of electrification and a positioning to profit from the rising demand for electric cars. On the other hand, the simultaneous decrease in their EV sales prediction raises concerns about Toyota's dedication to an extensive EV portfolio, as opposed to retaining a significant presence in hybrid and conventional cars. This difficulty is representative of a larger issue in the automobile industry: how to successfully combine elements of the past with those of the present and the future. Ford and GM's delay contrasting strategies. When combined to the company's earlier financial pledges, Toyota's massive $8 billion investment increases the overall investment to an astounding $13.9 billion, demonstrating the firm's unwavering dedication to electric car technology. Toyota's resolve to strengthen its position in the developing electric car industry is shown by this substantial financial commitment. The company's commitment to both technical advancement and community and economic assistance is reflected in the creation of more than 5,000 new employment. Toyota's intention to lead the electric car revolution is signaled by this investment, which might alter the competitive environment. However, Toyota's dedication to developing electric cars stands in stark contrast to the choices taken by several of its main competitors recently. Ford's decision to put off investing in EV and battery manufacturing, and GM's decision to put off building a major electric truck facility in Michigan are both examples of clearly different approaches. Toyota's unwavering dedication to investing in electric car technology, despite possible difficulties, puts them as a forerunner in the race to electrify the automobile industry. Even though these delays may be linked to many variables, including market circumstances and supply chain issues, there are a number of ways in which Toyota's competitors will be impacted by the company's sustained expenditures. For one, Toyota will maintain its technological and manufacturing advantages, but it will also create a precedent for innovation that may lead other manufacturers to make similar commitments to electrification. Companies' long-term commitment to sustainability, commercial relevance, and capacity to supply the rising demand for electric cars are all reflected in these choices. What are your thoughts on Toyota's strategy shift and its implications for the EV market?